Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Indicator, when you're defining it in technical analysis, is a mathematical equation that gives you support and resistance levels. So you'll be looking at different components and basically giving you a mathematical return, like a moving average is giving you the average of whatever period you're looking at. Let's say a 20-period moving average on a daily time frame. You'd be looking at the average of the last 20 days. So most people are not going to be considering that as an indicator, although it definitely gives you that indication of price action. You're just getting into semantics, though. It doesn't really matter what you call something as long as it works. So I guess that's how I approach technical analysis. Dave asked, do I cover multiple time frames when showing examples on my DVD course? Definitely, yeah. I look at not only things that, for instance, I'll show you a setup that's formed intraday, but I'll show you how the daily chart comes into play as well as the smaller time frames and how they all work together to form the probability on a setup. I'm scrolling here through the questions I've already answered to find those that I haven't, so pardon me for taking a minute here. Terry asked, this doesn't go along with FX, but it's still a good question because a lot of people want to know, when you're getting into trading, what time frames, do you start with? And in this case, he's asking about the ES. And what two time frames you should start with on the ES. Basically, with any security, if you can start practicing them in times of the market where it's not as active as other times, then that can help you out in terms of it's not going to move as quickly against you. Like trading on the ES, for instance, I'd like to start after hours because things are a little bit slower. Particularly if you want to start at the slowest time, then you'll be looking at basically from 1600 to midnight or 2 in the morning, and then things pick up again after 2 in the morning. When you're looking at a lot of these different securities, try to find other securities that mimic that price action where you can keep your risk at the very minimum to start out. So, one of the things to look at with the options is that you do have set price limits. You're not going to lose more than a certain amount each time, and that can be very helpful as something to kind of start out with. But when you're looking at trading smaller time frames, you can keep your risk a lot tighter than you would on trading larger time frames, and it also gives you more practice. So looking at anything from FX options to ES, if you stick with smaller time frames when you first get started, then that can help give you that extra little bit of room for study. But don't go too small because then you're going to run into problems of being able to execute, since newer traders also have, a lot of traders, even they're professional, have a harder time doing really rapid fire execution. So really, I wouldn't go too much lower than a 5-minute time frame to begin with, just because getting your trades off is going to be more difficult. You're going to be more likely to be sloppy and lead to more errors. So probably for anything, if you're starting with day trading, you're going to want to start with like 5 and 15-minute time frames. Look for setups on like a 5-minute chart that are backed up by a setup on a 15-minute time frame or a larger time frame. So for instance, if you're looking at, let's say, just a very typical 2-wave price move or a breakout here, we have in this case, we've got a 3-wave triangle. But if you're looking at that forming on like a 5-minute time frame, look for something that also corresponds to a buy setup on a larger time frame as well to give you that trigger. So if this is part of like a larger bull flag and you see that pattern develop, then that's a great opportunity because you've got that larger time frame backing your smaller time frame. It looks like I've ran out of time here. Any other questions? If you have them, please forward to me at tony@swingtrader.net. I'd be happy to answer them. And also, ISE will be posting these archives again on their website. You can see the link marked here, right here. It's www.ise.com/archives. That's a little dark. I'll remove that. But you can see that there. So you can go there to view a lot of the archives. And here's also a list of the upcoming presentations over basically the next month, month and a half or two. So if you'd like more information on trading FX and FX options in particular, then be sure to sign up for these. And you can do so by just going to ise.com, and they have an education link on there. So definitely go and check those out. So Elanit, I want to thank you for having me here today.
Hi, Toni. On behalf of everyone here and the ISE, we also wanted to thank you so much for presenting tonight. It was really great. We had a lot of questions. And as Toni mentioned, we have the webinar will be archived and will be made available first thing tomorrow morning. So just look out for our email. And next Tuesday, we have John Najarian from Option Monster, who's going to be talking about playing both sides of the market using FX options. So thanks again for everyone attending, and feel free to contact us with any questions.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.